Today we're joined by Luiz Viana of TMG Capital. Welcome to PrivCap today. Thanks for being here.
Well, thank you very much. I'm very honored to have the chance to discuss ideas with you.
Why don't we start with the mood right now in Brazilian private equity? Clearly the Brazilian economy has slowed down like many other emerging markets. What has this done to the private equity industry, and sort of what is your mood about the current state of affairs?
Well, as I think it's information that is disseminated across the Western world, Brazil is now facing what can be called a recession and a crisis. But more important than other situations, it's a crisis that is not just economic. It's actually a political transition. And by that I mean the fact that we are confronting issues as a country that are extremely relevant for the future. And I mean issues related to the free press, the role of the free press in the country, the role of institutions. I think there is also the role of the regulatory agencies and reforms, like the needed tax reform and political reform. The country is also confronting an issue that is in every economic press around the world about how do you cope with corruption. And I think that from a young democracy like Brazil, that works imperfectly, but it does work as a democracy, I think we're making significant progress. More and more I see the country dealing with the real relevant questions. And that is a situation that will eventually, in our opinion, lead to a more stable, more mature environment for economic development, economic growth, but also dealing with building a stronger and institutionalized environment more than we have already achieved.
So in the meantime, and while that takes place, what does all this mean for the private equity industry in Brazil, which is, it must be said, the largest industry or the largest private equity industry in Latin America?
If you look at the short term, we're facing a situation that creates adversity. Why? Well, first of all, because interest rates again are significantly high. There is a fiscal adjustment underway that creates, again, an environment of lack of capital. Public markets are not open, given the circumstances, and therefore companies strive to be able to finance growth or investments or acquisitions. Having said that, I personally believe that that's part of what I call the cyclicalities of emerging economies. Brazil being a specific case where the cyclical aspects that also affect mature economies, but they are in amplitude and in frequency more important in emerging economies. I believe, therefore, that having an environment today that is not over the short term friendly to exits is, on the other hand, a very important opportunity to deploy capital. And that is not just because the valuations are lower.
So the public markets are somewhat closed for exits at this point and for basically any IPO. What does that mean for new deal flow for you? On the one hand, it's not good to have fewer exit options, but on the other hand, this means that companies are in need of capital, correct?
That is correct. There are companies in certain niches and certain sectors, they continue to grow. Not all of them. The companies that are in sectors that are affected by the fiscal adjustment, they're flat, and some of the sectors are even posting negative growth. But that doesn't mean there aren't other sectors that are continue to grow. Like, I'll give you an example: the biotech, pharma, education, healthcare, analytics, and consumer products. These companies have a hard time finding the necessary capital to fund growth, be it organic or acquisition. And that also doesn't mean that there aren't exits. The strategics are looking at Brazil not over the next 2 or 3 years. The strategics are looking over a longer, maybe a decade, in which case you can make the statement that we are probably going to get back to growth in 2 or 3 years down the line, which as a consequence makes this window that we're going through right now as a good moment for deployment of capital.
You have an investor base that includes international investors. What kinds of questions do they have for you about what's going on in Brazil?
Many questions. First of all is the question that you posed me, is how do you see the future of financial sponsors in a market with that kind of cyclicality? But the second is how do you deal with currency fluctuation? The third is how do you deal with the fact that the concept of leverage buyout in an economy where interest rates are really high, it's not a feasible concept. And therefore, how do you generate value for the investors and shareholders? And the answer is pretty much related to our strategy, if you will, since the inception of TMG. We look at these events, be it a macroeconomic turmoil like the hyperinflation of the 80s, be it a country risk during certain periods of time that went up to 2,000 basis points, be it a situation like today where you have the tax burden and the reforms are still uncertain. It's to understand, that's my answer to investors, and I think I've been listened until now. You have to understand the impact of those variables and what are the economic impacts and how do you take advantage of that. For instance, prior to founding TMG, I actually bought some assets with our own capital. I have been a CEO of small, mid-sized, and large companies, and I started companies from the scratch. From that particular standpoint, I could see hyperinflation inducing hyperfragmentation. Well, then when we put together the first pool of capital on a professionally arranged basis, we wanted to do the buy and build and consolidation strategy to address the point of hyperfragmentation. But hyperfragmentation was just one of the consequences. The other was, for instance, the void that certain areas created, like in pharma and biotech. The other was, it is today, the fact that healthcare, education, and infrastructure have been badly underinvested, which creates a difficulty to access capital and to bring talent and to bring technology. So the economy has, if you will, scars from these events, be it macroeconomic or a consequence of a regulatory environment or a consequence of privatization that took place decades ago.